big news for millions of pensioners and benefit claimants in the UK. Starting September 30th, the Department for Work and Pensions is rolling out 3 brand new banking rules that will directly affect how pensions and benefits are paid. These rules are designed to tighten security, improve efficiency, and crack down on fraud, but they also come with some important changes that everyone receiving payments from the DWP needs to know. Whether you're claiming the state pension, universal credit, or other benefits, these rules could impact the way you access your money and manage your finances. Let's break down exactly what's happening, why it matters, and what you need to do to stay ahead. The first major rule is linked to account verification. For years, one of the biggest issues the DWP has faced is fraud and error in payments, with billions lost annually due to incorrect information or fraudulent claims. From September 30th, all new and existing claimants will face stricter banking checks. This means that when the DWP pays your pension or benefit into your account, the system will automatically cross-check the name on the account with the name on the benefit claim. If the details don't match, the payment may be flagged or even delayed until the issue is resolved. While this might sound like a hassle, the government says it's a vital step to ensure money only goes to the right people. For pensioners, this means making sure your bank account is in your own name, or if it's a joint account, that the details exactly match what's registered with the DWP. The second rule focuses on payment methods. Traditionally, most pensions and benefits have been paid into standard bank accounts, but starting September 30th, the DWP will phase out certain alternative payment arrangements. For example, in the past, some people could use post office card accounts or other special services to receive their money. That option is being removed, and payments will now need to go directly into a regular bank or building society account. The idea here is to modernize the system and reduce reliance on older payment methods that are considered less secure. This change could cause short-term disruption for people who still use post office accounts, so the DWP is urging everyone to set up a proper bank account as soon as possible. If you haven't already made the switch, now is the time to do it, otherwise, you risk payment delays when the new rules take effect. The third rule is about monitoring and reporting. The DWP is introducing a new banking partnership that allows closer monitoring of suspicious activity. Essentially, banks will now work more closely with the DWP to flag unusual transactions, duplicate accounts, or signs of fraud. For most ordinary pensioners and claimants, this won't change much in daily life. You'll still receive your money as normal. But for those who try to exploit the system, it's going to be much harder to slip through the cracks. The government insists this will protect taxpayers' money and safeguard the benefit system for those who truly need it. Still, it's worth being aware that your payments may be under more scrutiny, so keeping your personal details up to date with both your bank and the DWP is essential. Now, what does all this mean for you in practical terms? If you're already receiving your pension or benefits into a standard bank account with your correct details, you probably won't notice much change. But if you're using older systems like post office card accounts, or if your account details don't perfectly match your DWP records, you need to take action quickly. Imagine waiting for your pension payment and finding it delayed because the system couldn't verify your name. That's exactly the kind of issue these new rules are designed to catch. Critics argue that these changes could cause confusion and hardship for some of the most vulnerable groups, especially older pensioners who may not be as comfortable with online banking or switching accounts. Advocacy groups are already calling on the government to provide more support and clear guidance to ensure no one is left behind. On the other hand, supporters say the changes are long overdue and will help secure the benefit system for the future. With fraud costing billions every year, the government is under pressure to tighten the rules, and these banking updates are seen as a strong step in that direction. As the September 30th deadline approaches, the key takeaway is simple: check your banking details now. Make sure your name and account details match exactly with the records held by the DWP. If you're still using outdated payment methods, set up a proper bank account before the cut-off date. And stay alert for any letters, emails, or messages from the DWP confirming how these changes might affect you personally. This is not just an administrative update, it's a fundamental shift in how pensions and benefits are managed in the UK. From security checks to modernized payment methods and closer monitoring, the goal is to make the system fairer, safer, and more efficient. But for pensioners and claimants, the most important step is preparation. Don't leave it until the last minute. Make sure you're ready before the new rules come into force on September 30th.